Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. Any investor who's been paying attention has heard quite a bit about this rising rate environment that we are currently in. With the 10-year Treasury near that 2% mark, we asked the question, will this continue, and how might this impact my portfolio? So for muni investors, it can be even a bit more of a head scratcher. So lots of questions today for my guest, Kathleen McNamara, from the Chief Investment Office here at UBS. Kathleen, always good to see you and have you come on and talk about what's going on in munis. Thanks for joining us.
Thanks for having me back, Anthony.
Of course. Kathleen, here's the first question that I think everybody will want to hear from you. And I just talked about this rising rate environment, and they're wreaking havoc across financial markets. So on the municipal bond side, how are they weathering the storm?
And that's right, Anthony. Since we last spoke, certainly a lot has happened. A more hawkish Fed, a surge in U.S. Treasury yields, as you just mentioned, inflation pressures, and more. Munis were not immune to these developments. Although in the early part of January, what we saw is that munis were initially slow to react to the sell-off taking place in the taxable bond markets. They did catch up, however, and witnessed some substantive downward price adjustments toward the end of the month. This resulted in the worst monthly muni performance seen since the pandemic in March of 2020. And this made some headlines. That said, on a year-to-date basis, munis are net down by 2.5%. On the bright side, they are holding up a bit better than the more volatile Treasury and corporate bond markets, which are down by about 3% and 4% respectively, as we show in my chart.
Yeah, and it's interesting to actually see that chart, Kathleen, because normally you don't necessarily see munis always moving in lockstep with treasuries. So it's a really different and an interesting story that's been going on out there. But what about fund flows? What are you seeing out there in terms of flows for the municipal bond sector?
Not surprisingly, Anthony, that long string of net cash inflows to muni mutual funds that you and I talked about on previous UBS trending segments, that has now ended. Muni funds have now seen about $6.5 billion in outflows in the space of only the past 3 weeks, and that also made some headlines.
Well, it's interesting because I suspect that I would call it abrupt. You were on with us a month ago, so it seems like there's this abrupt pivot to outflows from muni mutual funds, but it seems to possibly have also had an impact on the yield curve. So what type of shift have you seen in muni yields along the curve?
Sure, Anthony. Yeah, that pivot was pretty quick. As soon as we saw that negative total return print for the month, which was in that previous chart, that's when we saw that pivot to outflows. So you ask about the yield curve. Yields have jumped higher year to date. If we compare it to January 1st, the high-grade muni yields have jumped higher all along the curve by about 40 basis points to 70 basis points, as you can see in my chart. The largest yield increases were seen on the shortest dated bonds, and the reason for that is that part of the curve prices in that shift to that tighter monetary policy. Those yields are now around the 1% level, and believe it or not, that is a level that some buyers are now finding attractive for their liquidity strategy, because as you recall, those yields were maybe only about 20 basis points the last time we spoke.
That's right. The shift has been just unbelievable and quick. Yes. And as we've seen with this market, a lot has changed in the last month or so. A lot of volatility, not only in fixed income and in rates, but also on the equity side, which I'm sure many of our investors are familiar with. So let me ask the million-dollar question then, Kathleen, is so in this market, this volatile market environment for municipal bonds, which is not words that I thought I would ever say in my career. You don't see volatility and munis in the same sentence. So this is interesting and probably really, exciting and fascinating for you as a strategist. So what strategies and actions are you recommending that muni investors should be thinking about for their portfolios, or any particular sectors that stand out that you're looking at?
Yeah, sure, Anthony. Yeah, this period of volatility that we're seeing, this is the first bout of volatility we've seen since the pandemic, which was back in March of 2020. And the bout of volatility before that, you have to go back all the way to November 2016 when we had, the surprise results from the U.S. presidential election. What we are talking about now during this bout of volatility with our clients really centers around three themes. The first is to take advantage of better entry points. The recent backup in yields that we showed in the previous chart is offering income investors with a longer time horizon an opportunity to buy into tax-exempt market at better valuations than seen in quite some time. It's very difficult to try to pick a top or a bottom. Second, we're talking to our clients about favoring positions in high coupon premium bonds. And the reason for that is because the high coupon has a very defensive characteristic in a rising rate environment. And a third strategy for muni portfolios is to practice sector diversification. All muni sectors have witnessed price losses year to date, and that's because the backup that we've seen is really related to rates rather than credit concerns. At present, our credit team sees opportunities in state and local governments and toll and bridge facilities. At the same time, investors willing to withstand some moderate credit risk in the near term, the airport sector is now seeing an uptick in issuances. Therefore, we think that area is now providing some interesting opportunities for selective buyers. By contrast, the private higher education and healthcare sector continue to warrant a cautious outlook from a credit standpoint.
Great. And before I let you go, Kathleen, really quickly, do these moves, and especially the outflows that you're seeing in munis and the way the yield curve has been moving, is it surprising to you, or would you have expected this with what the expectations are for the Fed and obviously the inflation concerns that are out there?
I mean, what was a surprise is how fast the Treasury yield increased. And, a rule of thumb for us to figure out if we're going to start to see some outflows is if you see an abrupt move in Treasury yields. And what I mean by that is about a 35 basis point move in a couple of weeks on the Treasury side. Chances are a few weeks later, you're going to start seeing an outflow cycle in the muni space.
Great. Well, Kathleen, thank you. It's always great to talk to you as our resident municipal bond expert here at UBS. And we'll look forward to having you on in a month. Who knows what'll be different between now and then, and we'll sure have a lot to talk about. Great. Thank you, Kathleen. Great to see you.
Absolutely. Thanks for having me, Anthony.
Of course. And for more information on anything that Kathleen was discussing when it comes to municipal bonds or anything else from our Chief Investment Office, you can visit the website, ubs.com/views. And as always, if you have any questions about anything we spoke about today, make sure to reach out to your financial advisor. And follow us on all of our social media platforms like LinkedIn, Twitter, Facebook, and Instagram. There's lots of content there from Kathleen and the rest of the team, as well as you can also find past UBS Trending episodes and clips of our shows there as well. In the meantime, everybody, we hope you have a great day, and remember to keep your eyes on what's trending. Thanks for joining us.